Let's record. Okay. Backtesting session is in progress. So what I'm going to do here is I'm just going to flatten this chart so I don't know where I'm going back to. Then I'm just going to grab some time in, let's do the beginning of this month, 7th. When is the 7th? 7th is here. That's Thursday. Friday. Let's do Monday the 12th. We'll start at 2. Okay. We have the charts. So what I'm going to do initially, let's do 5. I don't know what the sizes are here. But starting from here initially, what I'm going to do is in the 1 hour time frame, I am just going to decide whether or not this chart is going to be bullish or bearish. And currently we are in bullish structure. So bullish structure. And after that, initially, I'm just going to mark off any form of POI that I could see. Normally I would do that, but for the backtesting strategy, I'm not going to, because I am backtesting specifically the silver bullet. So I'm going to go to the 15-minute time frame just to see where we are here. And then once I'm on the 15-minute time frame, I'm just going to activate this. Oh, it's not going to show me. So I just want to check, make sure that my timings are right here as well. So Asia, 8 to midnight. And I'll mark that off. So 8 o'clock US time is going to be here. So that will be buy side liquidity. Asia high. That's what I'm going to mark off. And then midnight is going to be here. So your sell side is over there for Asia low. And essentially what I'm going to do here is I'm either going to wait for a break of structure in either direction. Right, so I'm either going to wait for this low over here to get cleared. And then what I'm going to do is wait for a responding high to get cleared. So for example, the way I'm going to do this is chart trading over here right now. I'm going to wait for it to either clear this low here. And then once it's cleared this low, I'm going to wait for it to clear this high over here. And then I will look for a long entry to take out the buy side liquidity of Asia session. Right. Vice versa, if this goes up first, comes down, I would look to sell deeper into this level. But that's essentially what I'm going to do here. I'm going to go to the 5 minutes as well. And then once I'm on the 5 minutes, I also want to mark off my vertical lines for 3 a.m. to 4 a.m. It's going to be there, and it's going to be my silver bullet time frame. So I only want to take a trade within that within this time zone over here. Right, so let's wait and see. The buy side liquidity, sell side liquidity of Asia is on this low here. I'm going to move it down just because I know that this low is the low I want to be able to take. And let's kind of see, let's play this chart one at a time. So here we go, right? So we didn't take the lows, we took the highs, essentially. So now what I want to do is, because we took these highs here, I want to see where, if market's going to keep pushing or if it's going to come down. And you see here, so market pushes up, takes out these highs, then it decides to come down to clear these lows here. And that's the section that I want to watch. Instead of getting into a trade kind of there, I want to wait till the highs and the lows are cleared. And now they are cleared. I'm pretty sure this was a news day as well, because that candle shot up really quickly. Let me go back. So check this next candle. Check how it opens. Boom, up, down, and then it closes up. So that's a news candle. So essentially that's how that's working right now. Let's see, open this up a little bit more. Price trades down a bit more. Let's try to see what kind of structure we're developing here. So we take buy side liquidity and we shoot up again. Okay, so that's interesting. So in this area here, with this news drop, and we shoot up, I would wait for retracement. in this fair value gap area here. Unless we get a clear of a low, like unless the market comes down and takes out this low all the way down, I'm going to remain bullish on this silver bullets setup for this session here. Let's see. Okay, cool. You take the lows. Now, this is where it gets interesting. Because you took buy-side liquidity Asia, you completely cleared it. You never traded below it here. What I'm going to do here is I want to mark off this candle here as my possible supply, because I'm treating this as like a breaker block. I'm not going to do that. I'm going to do it like this. So I'm treating this here as my breaker. I'm going to change the color of this to black as well, just so it's less confusing with all the red. So this is I'm treating as my breaker. So if we trade back up into this level, I would look to maybe short if we trade back up. Otherwise, this would be a missed opportunity to trade. It wouldn't even be missed. It would just be untradeable. We've got 2 candles left. Yeah, this is untradeable. Only reason why is because you never get the entry. Right, so for example here, price shoots up for news, comes back down. It does come back down to this double bearish candle here that you could have maybe, if you wanted to, go long off of, but for me that wouldn't have been a trade because you never clear these lows properly. You just wick below here. And for me, that's not a reasonable strategy to be able to go long off of this as a support, because I want to see price trade below here, not just wick. So that for me there would not be a trade. That would be just completely left out. I'm just going to do this, and then I'm going to play this chart out to New York. So I'll let this go out. And then wait till 9:30, which is going to be about here. And now, all I'd want to do is mark off London highs and lows, which is going to be 2 to 5. So 2 a.m. is going to be here, which you already cleared. 5 a.m. is here, which you also already cleared. So you already cleared London lows. So this over here, I'm going to mark this as my sell side liquidity. That's London lows. You've already cleared that. So essentially, I would wait for 10 o'clock here, New York time. So let me go over to 10. And then I would go to 11. Sorry, I'm just busy with something else here real quick. Yeah. Now I go to 11, and now essentially I would wait for a break of a high or low. So over here, you see we break this low here. I would want to break this high up here. I'm going to mark these with a different color as well. Let's do green. No. Let's do orange. No. What color works good here? Purple. Yeah, let's do purple. So I'm going to mark it off there. Once you break above here, I would look to maybe get into something. This is a Monday as well, so just take note. This is a Monday session. So the markets are just opening for the week. Okay, so you take another low here. Still no real, there's still a lot of liquidity here. There's equal highs. So I'm not looking to short with equal highs. And essentially this session here, you have nothing again, just because I think it's because it's a Monday. Purely because it's a Monday, the market just opened. I don't think there's anything hectic. Plus, I also think this is a news week. I want to see how this plays out though. It does go up and take those highs out. Would I have gotten an entry? No. So boom. Monday on this setup, on this trading strategy here, would not have worked. I'm going to move over slightly to Tuesday. We still know on the 1 hour time frame that this market is still bullish over here. So that's still important to take note of. We are still bullish. 15-minute time frame, I'm going to wait for the next day. So I'm going to wait till this chart plays out into the evening. And then we get to about 12, and we get to about almost 3 in the morning. And this is where I'd want to look at the chart. So I would kind of see this, wake up in the morning, see this. We're going to grab midnight. Midnight is here. So the high of the session would be here. So we buy side liquidity, Asia high. And then Asia ends at, no, I think it's 8 p.m. to midnight. Let me just double check that. Yeah, it's 8 p.m. to midnight. So that midnight there would be that. And then that's not midnight. That's 1 o'clock. Where's midnight? So 8 is here. Sorry, my bad. 8 is here. So this would be this. And then let's play out a couple more candles. Where's midnight? Midnight starts here. So your buy side liquidity, I mean, this is going to be sell side. So 8 is there. That would be the high. And midnight is here. Yeah, so this is going to be the high. So that's my buy side liquidity and sell side liquidity. I'm going to mark it off as Asia as well, just so you know. I just want to make sure I'm recording properly. I am. We've got Asia low. So essentially here, I'll either wait for this high or low to get taken on the 5 minutes as well. There we go, Asia high, Asia low. And then let's play this out one candle at a time just to see what happens here. So boom, you break above this high. So I'm going to go to the 15. You break above that high. You trade above it as well. And essentially, I forgot to mark off my vertical line for 3. And 4. And essentially now you're trading back down. So here, in this scenario here, right, you've taken this high completely. You immediately trade down and you close below here. And I would mark this off as my market structure shift. And over here, you do leave behind a fair value gap that gets traded into over there. This would not have been like a valid trade to take because it's not in my silver bullet time frame. But you could have gone short here, stop loss above this high, target these lows here for a 3-to-1. But for the sake of this, I am trading only the backtesting strategy that I have. So I want to specifically test it. Okay, so this is a nice trade up here. I can't go to the 1 minute because I know that I don't have a version of TradingView that'll allow me to view 1 minute time frame on this far back into time. This looks like a suitable area to even go short off of if I was trading normally. Once again, I can't because I'm only trading the backtesting strategy. And silver bullet time frame is now open. Right? I would have essentially looked to maybe go short off of this candle here. Just because looking at it right now, it looks like there might be an order block inside here. But once again, I'm only trading in that zone. So let's see. Is my Wi-Fi cutting? Wait, someone just said in chat they can't hear me. Because I am talking. Just to make sure. Yeah, I am talking. So essentially that's that. I don't see a fair value gap here. I would go short off of this in my trading strategy originally. But there's no fair value gap here. I'm just trying to see, no candles are printing fair value gaps and then trading back into it. But here you kind of do. Because you have this level here. There's a gap there. This candle closes just above it. You could go short there. I would have gone short up here with this candle here because you get that nice push up, break down, trade back into this level here. Would want to go short there. For the sake of this, you could also look for the short. This will trade higher though. So if I sell here, right, my TP I'll set there. Stop loss will set. Could set it there. And then, actually wait, let's get rid of this. How much am I selling? Let's just do 100. Sell. TP is there, stop loss is there. Now for this example, the TP, right? Wait. These numbers are so wrong. Sell 1,000. Get rid of that. Sell again. Just to make sure these numbers are right. Stop loss will be above this candle here. TP for this chart here. Right, I'll go to the 15-minute just to see where we are. And I'll TP here at the next low. So over there. That next low is where I'll kind of look to do TP. Go to the 5 minutes again. This is in the way. Let me move it up to the side. Actually, move it this way. Let's see what happens here. Open next candle, we go down, instantly push down. And then stop loss to break even there. And at this point, you'd be attacking sell side liquidity. So you would have traded below, and I would have taken partials here. As soon as you go below this level, partials need to be taken. And then I want to see, do we keep going down? We should. Yeah, there. As soon as you get that wick down and the close up there, I would like to close the trade. So I would close it here. Like that. So that would be a win. So essentially you would have taken this trade, that candle closed there. But essentially inside this fair value gap, your target would be there, would be a 1-to-1 basically. If you took 50% off, you would get 0.5%, or basically 1% almost. And essentially that's how that would have worked. Moving on to the next session, I'll do one more on this chart. Let's see, let's go on. Let's play till 9:30. So it's 8 o'clock here. Whoa, look at that news. What? That's crazy, dude. Yeah, news drop and you take this low. Let's keep going. So we get 9:30. So, okay, so over here with this high being created here, and then it immediately getting taken, London highs and lows are completely invalidated because it has taken London highs and London lows. Because over here, this high here would have taken London high, and this low that it creates by news would have taken that London low, right? So essentially with this setup here, looking for the 10 a.m. to 11 a.m., I'm going to go back in time a little bit. Looking at the 10 a.m. to 11 a.m., this is my sell side liquidity that I'll need to take. I want to clear this low. Essentially what I'm looking for is I want to take that low, break a high, trade down, and then look for that long entry. If I get that, I'll trade. If I don't, I won't. So let me also put my vertical lines in 10 to 11. Let's see. What do we get? What do we get? So this is the high we cleared. So we cleared this high. If you were on the 1 minute time frame, okay, so this is where it gets interesting. This over here is a consolidation. If you were on the 1 minute time frame, because that is just going to be liquidity buildup. You can see here at the bottom, you can see there's liquidity buildup here. You slam down, you take it, right, and then you push up. So that's an interesting one for me. Could even look to take a long position, but I'm not going to, only because it's a news day. I'm not just going to long off of that there. Okay, cool. There is no trade for the PM session for Tuesday because of the news. The market kind of just dies out. And I'm pretty sure if I let this chart play out, the market will just range. Yeah, look at it. It's just ranging. And then eventually during the New York PM session, which is here, you basically get nothing. It's more range. And then it goes on to the next day. And this is where I'll look to take another silver bullet coming into this next session here. So wait for 2:30, which is about here. Yeah. And then it's mark off our session highs and lows. So 8 p.m., which will be here. So it'll be Asia low, sell side liquidity Asia. I think at this point you guys should be understanding more or less what I'm looking at. Midnight would be here, so that would be the high. And the high immediately gets cleared. So what this is for the top, this is also buy side liquidity. Boom, just like that. So now gotta mark off my verticals. 3 a.m. which is gonna be there. 4 a.m. which is gonna sit around there. Let's look for a setup. Let's see what we get. Okay, so yeah, the sell side liquidity Asia gets taken, right? But it's not just the sell side that gets taken. You break this low, which is also important to understand. This low gets broken. Let's make that purple. That low gets taken. So if we trade above this high over here, I would look to go long. If we don't, then I would look to maybe still stay short. All right. Fair value gap time frame is here. This candle prints and leaves a fair value gap straight away over there. I want to go short off of this. I'm going to sell 10,000. I'm going to sell 100,000 just so we can get decent numbers here. I just want to look at this more in depth in case I'm missing something. You have liquidity build up here, obviously. Money down. You reach and extend for sell side Asia. Your silver bullet time frame opens and leaves this gap here. I want to go to the 15-minute quickly before I trade this. See, this fair value, there's no fair value gaps up here because this candle here trades into that. I'm going to zoom in. See, this candle here trades into any mitigations here. Go back to the 5 minutes. So essentially, I would look to take a short off of here. Also because I would view this over here as a potential breaker. Sorry, no, order block. Like that. And it's really interesting that this candle closes perfectly on that. So in real time, I would wait and see how the next candle opens, if it goes up or down. But for this example, I would take this specifically right now, just because I'm back testing. So we're going to sell. I'm going to move this chart up slightly. Stop loss will go. Supposed to be going up here. Let's put it up there. Let's put it up there. And then my next target would literally just be these lows, but that's almost a 1-to-1. So what I'm going to do here in this example, I'm going to fib this range. And then off of that fib, I'm going to extend this TP down to the -618. You could do the -1 and then TP. Okay, I'm going to do that. So do you see this -27, right? I'm going to set this over here as my TP1. I'm going to make this, what color? Blue? No, the other thing's already blue. Make it orange. Make it 2 pixels as well so everyone can see it. Then I'm going to set this as my TP2, -618. And then my TP3 is going to remain down here. So if this goes up, I just get stopped. But if this goes down, I've got multiple TPs. So let's see, how does the next candle open? Bearish. So boom, I'm already in profit. Still in profit. Let's see. This is where it gets interesting. So the silver bullet time frame ends now. Right? I don't want to come back up and trade above this fair value gap, so I'll tighten my stop loss slightly, just so I lose less. The original stop loss was $75. I'm gonna just bring it down to make it 50. And if we push down here, yeah, I'll tighten this up even more now, because there's no reason for this to go back up. And now we're ranging, which I don't like. So I'll maybe even go break even here for the sake of being break even and not losing anything, slightly in profits because of commissions or whatever. Spread might have stopped you out there depending on what broker you have, and you get basically break even. And that isn't a loss for me, neither is it a win. Actually, I'm going to count it as a win just because a break even is better than losing, right? Not making money is better than losing money. So Boom. That's that. I'm going to remove this and wait for the afternoon session. Just going to start basically now. It's 8 here. I'm going to wait a little more candles. 9:30 literally. So now what we're going to do is we're going to do a vertical on the horizontal. Actually, that's a horizontal ray. We're going to do a vertical 10. We're going to do another vertical at 11. And then just want to check the times here. 2 to 5. So 2 a.m. would be here. So this would be London highs. Then I'm going to mark off 5. This will be the low, yeah. That would be the sell side liquidity. I just want to check something here real quick. Sorry, just trying to change some settings. It's not important right now. All right, going into the the New York Open. What I'm going to do here. Wait a second. That's so weird. Hold on, I'm just typing a message in chat. So essentially, all I want to do here is either wait for this low to get taken. Black. This high is being taken, but it doesn't. Okay, this high gets taken. So buy side liquidity of London has been taken. So wait for this low here. Let me just make sure my mic is working. Yeah, it's working. Am I recording? I am recording. So there we go. Do we get this clear of this low? We don't. Not yet. Price is ranging. Okay, important to know, price is ranging. I can't trade that. The high gets taken again. Okay, so this high gets taken here. If you break this low here now, I would look to go short. If you don't, okay, I don't get a setup. Primarily because this market is untradeable. I mean, if you wanted to, you could go short. Like you could go long. Sorry, if you wanted to, you could go long here, right? And then essentially just extend this. So go for the fair value gap trade over here because you break this high, and you want to go long. But let's see if that actually works, right? Do you get that? Sort of. You get a solid over here. Max would have been a 3-to-1. Right now it's a 1-to-1 basically. Let's see. So this would be held into the PM session, and you don't really get much. So yes, you could have traded that, and then when you create this lower, if you created a lower low, so over here, you could have taken out for like a 1-to-1, but that's not really something that I want to trade, essentially. But essentially that's kind of the strategy, right? You wait for, I'm going to go up here. So you essentially wait for market to trade, and then you either wait for a high or a low to get cleared. So you get that low cleared, this high cleared, and then this low cleared. Then all you have to do then is wait for a pullback into a fair value gap inside of your silver bullet time frame, and then you get that position. So that's kind of the way the strategy works. The way I'm backtesting it now, it's the way I've been trading the past week to get a higher win rate. As you can see, this basically the strategy is you take less trades, but your win rate's a lot higher because you got one loss, one win, and a break even. And I want to go over something on gold. So this is live. I'm going to go to Euro USD, get out of this, and go to charts now, and essentially show you what I'm looking at here currently. I'm going to go to the 15 minute. So over here, right, you get the liquidity down. Buy side liquidity is here, basically relative equal highs. You create the low, And if you go up and take this high now, I would essentially wait for this chart to essentially do this. Either go up, take that high, trade into this level here, and then go up. Because this is my double bearish candle before my bullish expansion. So if this trades through, I'm going to wait for it to come back to that level so I can go long. And on gold earlier this week, I took a position up here. Let me go over this as well. So on the 1 minute, let's replay this actually. So let's replay to here. So essentially how this trade worked was, let's go to the 5 minutes so you can see how I looked at this chart. So we had buys, right? There was bullish buys on gold. Okay, 15 minutes. See what I'm looking at. Okay. Bullish buys on gold, you clear this high over here, right? That high gets cleared. This low here is the target. Okay? Just take note of that low, right? There's a big wick there. That is the target. This high gets cleared. This is a kind of a low, a high, a lower low, right? This is a lower low. This high gets cleared here. I would look to short this down because essentially on the 50-minute time frame, the same thing applies where you have this as your range. You take the low of the range and you would want to go and take the high. So as you take this low of this range here, you trade down and you would attack that high of that range there. And then essentially you would want to pull back to go up, right? But obviously before you can go up, you have to pull back. So essentially on the lower time frames, you can look for a short, right? Because you know the market should pull back. It is a trade that is against the trend. Don't get me wrong, but you're basically just trading off of that. So essentially on the 1 minute, this low gets created here. So you see this low here, that gets created there. And essentially here, so you break that low. Okay, you break this low here. And then you have, what am I doing? Whoops. 1 minute, go back to the 1 minute. You have this fair value gap here. That you trade into over there. Right, so you could have even gone short off of that. I didn't. I waited for this area here. So you see how we get a breaker structure here again. And then I waited for the pullback. Oh, go to the 5 minutes. Okay, so this is where it gets interesting. You get that push down in the 5 minute, right? And then if you look closely, this here is this candle's wick, right? Look at that wick over there. Look at this wick here. What is that? It's a fair value gap. And you're trading into it there, right? So this was, for me, was a fair value gap on top of a potential 5 minute order block, right? So that's where I went short on this trade. That's what it looks like on the 1 minute. And this is where I went short. I'm going to do 1,000. 1,000. I'm going to sell 1,000 here. My stop loss was above this high. No, it wasn't. It was over here, I think. Don't know exactly where the stop loss was. Somewhere in this range. And then my TP, obviously, we're targeting these lows. Right. So on the 1 minute, that's how that worked. This was a trade I took as well. And we go down. Right, let me just play this out fast. It's not very fast. There we go. So here as well, I'm going to pause this here. Okay, let me actually pause it. Hello. I think my internet's busy dying. Doesn't know what to do. Okay, I clicked pause, but it's not paused. Wait. Okay, let's just let this go. Let's just let this go until it decides to pause itself. We go to the 5 minutes. Oh my goodness. Okay, so there we go. What I wanted to add in here is you get this lower low here. Right, so you get this breaker structure. At the same time, you get this fair value gap here. Now, I know that this is not inside the silver bullet, but this is how I will track my trades to the downside, right? I'll see, does it have reason to come back up? Yes, it does. It's got this reason over here. You could even layer your trade, layer another position here if you wanted to. I'm actually going to do that. So actually, I'm not going to do that just because it's absolutely pointless. It makes no sense for me to add another like backtesting position in. But you could layer another position in here, move the stop loss to break even. You could go short again. Stop loss probably, I don't know, there or above the fair value gap. And then you target the same thing, right? So then essentially if you wanted to do it like this, you only have one trade in play because you would have this trade up here at break even already. Then you would have this trade stop loss being there. You could even move this trade stop loss to there, just above that stop. So that if you get taken, you get taken with profit as well. So it's kind of a break even then. But essentially this chart just goes down and 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 down until it eventually hits take profit. And that on this backtesting with that much sell, it's the 12K profit. But essentially the actual risk to reward rate of this trade, if I mark this off down here, go to the 1 minute, and I actually put in my actual stop loss was there. It's a 12 RR trade, which is essentially just the basis of understanding that once you get a range, once you get the low of a range cleared, it clears the high and then it has to pull back if it wants to go back up. Right? If it wants to go back up, it has to pull back. Right? So essentially that's how that works. I wanted to do a like this, right? So I'm going to delete this real quick. Delete this. Like here, right? You get this low cleared here and then you get this high cleared. So essentially, this is live markets, by the way. So essentially, this I would want to come down before it actually goes up. All right, so that's what I'm looking at there. With Euro USD, this is how it's trading currently. Which yeah, so that's kind of how my trading is working right now. That's how I'm doing everything. And that's kind of just the way it works, right? Hopefully, I was kind of hoping that we would have some people in the Discord so that I could chart some charts that they wanted me to chart, do the strategy with them. But it seems as if my mic isn't working on the Discord. So yeah, stream pause. So there we go. Much love. If you enjoyed the video, leave a like. I don't know. You don't have to. You can subscribe if you have to. I don't know. You don't have to. Share the video. This is a free video for everyone to watch. So I'm going to upload it. Give this a share if you find this interesting or whatnot. Nonetheless, thank you, and I appreciate it. Welcome back to this year's trading.